McCurrie of RMB Asset Management's in the studio tonight. Wayne, it's a gloomy day on the JSE today.
It is a little bit down, 2.5%, and I mean, even though it was red across the whole board, certainly the mining shares took the most pain here.
Absolutely. I'm looking here, platinum shares, all the big moves down, just completely.
You know, Anglo American down 5%, Billiton down 4%, the gold mines down also 4%, platinum down 6%, you know, Sasol down 5%. So, look, you know, don't ever read too much into one day's movement. I mean, the market has been very, very strong now for a month or two, and you know, it certainly hasn't broken down in total. But we had very strong day last Thursday. I think it was. Remember,
Yeah,
it was up 3%.
Thursday. Very strong, yeah.
Very strong, and then down on the bad US data that came out at the end of the week, and it seems to have continued. Although the Dow overseas is down about, call it 0.5% now. It was a lot worse earlier on, so that's picked up a little bit. But as you said earlier on, red across the whole board. The only shares that fared reasonably well, you know, the Richmond was flat, Renette was flat. British American Tobacco was the real big one. It was positive, up 1.5%. Banking shares didn't do too badly, basically ending the day flat. Standard Bank slightly up, First Rand down. But the weakness, as we've said a few times now, was in the mining shares.
That's funny when the British American Tobacco. I wonder if the people assume that the pressure of the recession is going to knock up smoking.
Well, look,
rates.
BAT is a very contrary share. It's a very defensive share. So, in theory, when the rest of the market falls, it should go up or stay stable. But of course, the converse also applies, that if the rest of the market goes up strongly, it will stagnate a little bit. It's very, very stable earnings, stable dividends, etc. Old Mutual taking a bit of strain, also down 6% to 10 Rand exactly.
Yeah, Old Mutual again. I just feel bad for them. They have a day every day.
It's a very volatile share, but I think it went up on one of the trading days last week. It was up 11% in a day. So very, very volatile. But they seem to have got over the worst of their capital funding squash that they were in towards the end of last year.
The FNB Civil Construction Confidence Index was out, a long title there, and it was down very sharply, saying, you know, civil construction is down. But it looks like that's already priced into those construction shares.
You would think so. I mean, the construction index is one of the really interesting parts of the market. I mean, let's call it a year ago, whenever it was. These were just the go-go shares, absolutely doing fantastic. Everyone was going to spend money on the whole infrastructure. I mean, unbelievable amount of interest in them. Whereas now they're trading at a 5 dividend yield. Remember, there's still earnings here. I mean, it's not as though the earnings are going to disappear. Trading at a 5 dividend yield and a 7 price earnings ratio, which, ignoring everything else, looks reasonable value. However, the caveat there is earnings are going to take big strain. I mean, we've seen all the contracts cancelled in the Middle East. I mean, the whole Middle East housing boom turned out to be a bubble, and it's literally disappeared in front of our eyes. Domestically, the civil should be okay, despite what the index said. You know, the civil expenditure is coming through, but it's being delayed. I mean, even Eskom, after being under massive pressure last year to deliver electricity, they have now got surplus capacity. So they've deferred some capital plans and shelved 1 or 2 capital plans. And generally, because of the recession, the pressure is off the infrastructure. So there's not that critical urgency to get the infrastructure up and going. I mean, all know that 2010 is coming, but the amount of money being spent on the stadiums, etc., is a relatively small part of the total picture. But you know, PPC, there was cement sale numbers out. I mean, cement sales are down. Last year we were importing cement. We didn't have enough. Now we've got too much. You know, so this is the way that economies go and the way cycles go. And unfortunately, we're going through the down part of the cycle at the moment.